Good morning, traders. It's Thursday, 23rd April. Sensex expires today. So, Infosys reports after close, GIFT Nifty is already down more than 200 points before we have even opened. And the question I want you to sit with for the next 7 to 8 minutes is this. What happens when client is trapped on both sides of the book and the morning gaps exactly into their pain? Yesterday, I said the default bias was defensive, sell on rallies, hold puts, buy on dips with hedges. Okay, today I'm taking the other side of that. The overnight gap just did some of the work for us, and the setup I see on the chain says the first hour and the second half are completely different trades. So let's look at what happened yesterday as well. So Nifty closed at 24,367, down 0.85% yesterday. Intraday low was 24,353. 24,400 was supposed to hold, it didn't. Sensex closed at 78,516, broke the 79,300 weekly flip by 784 points. The 78,500 magnet owned the close. Pro flipped clean bear in one session. Futures plus 222, essentially flat. Calls 2 lakh sold. Puts bought 1,18,000. FI pressed deeper short. Futures are now minus at 1,83,000. Added around 9,000 shorts on that day. Did not cover. Put book added around 3,45,946. That was the biggest put flow of the day by any participant. Client did what client always does on the day like this. Longed around 7,33,000 calls into the fade, shorted around 5,19,000 puts into the breakdown, maximum wrong side exposure on both legs. And on the cash tape, the first dual sell day in April, FIS sold around 2,000 crore, that's regular. DIS sold another 1,050 crore. Month to date, FIs have sold almost 85,000 crores and DIs cumulative stands at almost 81,000 crores. DIs have been the buyer of the last resort for the 4 weeks. Yesterday, they sold as well. So US closed strong. S&P was up 1.05%, Nasdaq plus 1.64%. Real follow through from Tuesday's risk is on. Europe was mixed. DAX minus 0.31%, FTSE minus 0.21%, CAC was also minus 1%. Asia tip this morning is a split board between Nikkei is minus 0.77, Hang Seng is minus 0.5%, but Taiwan is plus almost 2%, Kospi is plus almost 1.2%. Not a trend, but showing some bounces in the Asian markets. GIFT Nifty 24,190 minus 180 points from yesterday, a gap down of almost 0.7% priced in before the bell rings. India is diverging south of the USQ. Brent at 102.30, up almost 0.39% overnight. There was a spike near 5 am IST that almost ran higher before reverting fast. Treat that as noise, not a signal. USD INR is still sitting above that 93.40 gate. Both legs of the wrong side tell are live into the expiry day. Brent above 96, that's a bad news. Rupee above 93, that's a bad news. First time in April, both fired at close and they are still firing into the open. The rally to sell exists on the tape, but after a 180 point gap down, you don't sell the gap, you wait to cover to finish. Here is the part I want to internalize. Client ended yesterday's long calls into a broken floor and short puts into a breakdown. That is a force unwinding book. Both legs are losers. The second week gap down. First hour opens gap down, client short puts start creaming higher. So the loss isn't on paper, it's margin. Somebody has to cover it and they don't have a choice. The cover prints into the chain where pros already own puts. FIS is max short on futures and puts and nobody of the size is sitting there as an offering. Puts get slaughtered in the first hour, that is what I see. Not because they were on the wrong trade, because they were forced to trade into no offer. Once the covering finishes, usually by 10:30 to 12, the bid under puts disappear. Nobody needs them anymore. Pros and FI already own theirs. Client just covered theirs short. So then the tape has nobody left to hold it down. Now you get to the second half after 12, the mean reversion. The drift back towards the magnet of 78,500 on Sensex, the recovery into 24,300 to 350 on Nifty. This is the squeeze then relief mechanic on a trapped client book. Morning is violent, afternoon is quiet, close is a mean reversion into the magnet. My bias has shifted overnight. Yesterday's defensives becomes today's buy dips with hedges. Not buy the open, buy the dip after the forced covering happens during the first half. Sensex today, spot is trading around 78,516. ATM straddle is around 679. One standard deviation is equal to almost 850 points. So the expected range would be 77,700 on the bottom side to almost 79,300 on the upside. Real wall on the chain stands at 79,000, which is a major hurdle. So I don't see that getting broken today. OI is almost 1.3 million. Gamma is almost 3466 over there. This is the single heaviest wall on the board. 78,500 is the magnet. ATM OI stands at almost 9 lakhs. Negative gamma pin zone, which is a high likelihood. 78,000 is another level I'm looking at very strongly. OI is almost 1.14 million. PCR is highly skewed at 7.4. Gamma is minus 2423. That is the real floor I'm seeing at. So any dips towards 78,000 to 77,800 should be bought into for a covering towards 78 to 78,300. My path expectation, first half Sensex test 78,000. Panic from client, short put covers 78,000 holds or is broken. Second half drift back towards that settle between 78,200 to 78,500 is I am looking at, depending on how clean the relief is. Trade on the chain, holding 78,500 on open, sell the 78,000 strangle along with 77,500 strangle. So let's try to see Nifty as well. So Nifty 28th April ATM straddle stands at 360. One standard deviation stands at 451 points. Expected range is 23,900 on the bottom end to 24 almost 700 by next Tuesday. Biggest call wall is at 24,500, which is now acting as a resistance around 4.88 million. Put wall stands at 24,300 around 3.58 million. Psychological floor is around that 24,300 to 400 zone. Levels that matter today are Nifty 24,350 is the intraday line. Back below that 24,200 is the real target. Reclaiming 24,500 is going to be very difficult. So let's see what happens. The IV currently stands at 16.88, making the hedges cheap if you want to run this longer than today. So when client is max trapped on both sides, the expiry mechanic, it squeeze, then relief. Short put squeeze first because they carry unlimited loss in the gap. Long calls fade second because they were on the wrong hedge from day one. The trap most retail traders fall into is thinking the first hour is the day trade. On a trap book day, the first hour is forced covering. It's not the direction. The direction shows up after the panic ends. Write this down. Morning squeeze, midday silence, second half mean reversion into the settling. The fade of the fade is where the edge lives. When the participation change shows pros plus FIs on the one side and client alone on the other side, that is what is going to happen today. So bias still remains buy dips with hedges. That's the pivot from yesterday. The overnight gap does the work of the sell rally for you. 78,000 cents into the magnet. So Nifty below 24,300 is the line on the weekly cycle. About 24,300 at close means mean reversion work and one. Infy post close is Friday's story, not today's story. Don't anchor your trade into it. So 5-point prediction set going on, a record for tomorrow's grade. 78,000 tests but holds. Second half relief prints. Nifty settles above 24,300. Brent stays above $96. Pro teams some shots into the relief. You already know where to find the data. rupeecase.com/podcast. You don't need more information. You need the right information. See you all tomorrow with a grade. Have a good expiry, guys. Thank you.